segment is called Fed Watch. And so we will be talking about the Federal Reserve. Why? Because we're a lender and the Federal Reserve has a huge impact on all of our daily economic lives, whether it's getting a car loan, whether it's our student loans, and for sure buying a house, whether you're getting a mortgage or whether you're using private lending, and just all economic aspects of your life in general. So we know we've been in a higher interest rate environment after COVID. Inflation took off. And so rates were very low. They were basically at zero for the Fed, and they were basically ratcheted up over 5%. That changed the cost of mortgages and changed the cost of all types of borrowing, whether your home equity loan and any sort of floating rate loan, it's going to raise the cost of borrowing. So, you know, right now we're currently in a war in Iran, but I remember there was a moment, I think toward the end of February, where I check rates every couple days. So I'm checking what the mortgage rate is. I'm looking at what the short-term rates are, like SOFR and the Fed funds rate. And all that, the reason why that's so important for us is the lower those rates are, the lower rates we can give to our borrowers. And it's very competitive out there. So everyone's rates are based on this floor of rates, and they stack their rates on top of that. So I was really hoping there would be 2 rate cuts this year. And so let's say rates were at 3.6% or 3.5%. By the end of the year, the Fed funds rate would be at 3%. And my hope was that mortgages would at that point be 4.99%, because mortgages had gotten to 5.99%. And I was like, ooh, under 6. Psychologically, that's the threshold. And again, I was like, well, maybe if we have a good year with some rate cuts, we could drop another 100 basis points. I think going from 5.99 to 4.99 would be a very large shift in opening up real estate deals. More people will be willing to sell, more people will be willing to buy. That being said, that's been all put on pause with this current war. So rates have now ticked up to 6.5%. And with the cost of oil up, gas up, likely inflation will be up. When inflation's up, the Fed can't really cut rates because it'll kind of accelerate even more inflation. So right now, I go to this website called Kalshi, and I know there's a couple these websites that you can basically bet on anything, which I don't know how I feel about this, but Kalshi is this website that gives odds, kind of like if we were betting on the Super Bowl, of the Fed. What's the Fed going to do on April 28th and April 29th, which is their next meeting, which is the end of this month. Right now, Kalshi has that the Fed maintains their rate 98% chance. So you could bet $100 and you would get back $102 for that bet. I don't know if that's a good bet. So they have a 98% chance the Fed maintains their rate. They do not cut their rate. There's only a 2% chance that they're going to cut their rate 25 basis points, which is 0.25%. So very likely the Fed is not going to do anything at the next Fed meeting. Now, why won't they do anything? Well, there's another bet on Kalshi, which says the March inflation numbers, and we're in early April when we film this, the Fed wants inflation to be at around 2%. That's their goal. They made that a stated goal. They want inflation to be at 2%. It's been in the high 2s for a while. So it's better than where it was. It was at 6, 7, 8, 9% for a year or so. But they have an 89% chance on Kalshi that the March inflation is going to be over 3.2%. So very likely the March inflation number is going to be over 3%. So that, if you're wondering why won't the Fed cut, even though, you know, the president wants, you know, he's putting pressure on, you know, the Federal Reserve to cut rates because he knows it's going to boost the economy. He knows it's going to boost real estate. Well, they can't really do that when inflation's running at 3.2%. So let's talk about the June meeting for inflation. That is on June 16th and June 17th. Right now, Kalshi has a 91% chance that the Fed maintains their rate. So it's very unlikely in the next 2 meetings, in the April and the June meeting, that the Fed is going to cut interest rates. So that is just kind of the reality that we're in right now for the next 2 to 3 months. Lastly, and I end this segment on this. There is only a 63% chance that the Fed will do any rate cuts this year, according to Kalshi. 63%. So I bet if you had looked at this earlier in the year, this would probably be 80, 90%. So that has gone down to 63% chance that there will be any cut. That means if there's only one 25 basis point cut, that counts. So better than nothing, but probably not as optimistic as we were a few months ago, thinking that there would be lower rates. Next segment.